time for your weekly financial workout with your elite personal trainers, Ryan and Bob Payne, guiding you on how to build a stronger and more robust financial plan. So get ready. We're about to pump you up. Live from the greatest city in the world, this is No Pain, No Gain.
Good morning. It's No Pain, No Gain Financial Radio. I'm your host, Ryan Payne, President of Payne Capital Management, along with Chief Investment Officer, the man with the plan, and my father, Big Bob Payne. Good morning, Dad. How are you? What's shaking on this glorious Sunday morning?
Well, Ryan, it's a great day. I get to hang out with you, and was wondering, how you doing today?
Bob, if I was doing any better, I'd be guilty.
You were never that innocent, son.
Classic line from a classic movie, Wall Street, if you haven't seen it. Well, we have a great show this morning to help you on your path to financial freedom. We're going to cover, when can you retire? Do you have to keep working? Can you retire soon? Bob and I are going to discuss the process to help you determine when you can pack it in and live off the land, so to speak, or in this case, your portfolio. We're going to discuss having safe money in your portfolio. You know, what is safe money? How much of it do you need to protect your portfolio? So we're going to break that down as well, along with financial pornography of the week. A lot of stuff going out there in the news we want to point out to you. And we have our Spotlight segment where we're actually going to review a real retirement plan and highlight some of the flaws, or what we call pain points, that's P-A-Y-N-E, so you can avoid the same mistakes with your own planning and investing. So let's get right down to it. Let's talk about when to retire. We get a lot of questions from listeners every week asking us, when is it safe to finally retire? And do I have enough saved? Bob, do you find that most people are aiming for a certain retirement age or a certain dollar amount in their accounts when they're making that decision to actually retire?
First of all, Ryan, that whole question of is it safe just unnerves me today, because I spent a couple of hours in the dentist chair this week, and I'll never forget that scene in Marathon Man where they're drilling his tooth and asking him, is it safe? And he didn't know what the answer was, and they kept drilling that tooth. And it's just that pain of having your tooth drilled. It's just, it sends shivers down my spine. But I guess I'm digressing. You really want to talk about, what is it safe to retire? And this is the age-old question. It really is. And I think it just points to the fact how misunderstood the whole process of investing and saving, and really the whole conundrum of money, why people don't understand, what money is and what it means to them. In most cases, when you ask someone, what are your goals? What do you think they typically say, Rye?
I think they're usually vague, like, I want to retire comfortably. I don't have to worry about money. I want to be able to sleep at night. It's, a lot of these very vague kind of, retirement's this very fluffy, vague place, right?
Sure. And when you ask them, why do you invest? What do they tell you?
Because they want to make money is usually the more blanketed answer. I want my money to grow.
It's always the answer. It's always the answer. Now, is making money a goal?
It is not. Making money is not a goal. Yes.
Yeah, so what are some of the great goals of life?
Well, the big one, obviously, is retiring comfortably, and that, to me, means just being able to have enough money to live on, based on what your expenses, your anticipated expenses will be when you get to retirement. So that's a big one. Sure.
And, how about educating children, educating grandchildren, gifting money to your favorite and cherished institutions, right? And, passing on that net worth that's left over, to the next generation, and doing that with the least amount of government partnership. These are great goals. Right. And this really is what happened to me 40 years ago as an advisor, as a young stockbroker in downtown Philadelphia, trying to advise people on how to invest their money. The whole goal was to make money. So what do you think happened the first time the market went down, the first time they had a negative statement? What do you think people typically did?
They fled, because if the whole goal is to make money and all of a sudden the market's down and you're not making money in that instance, you're not going to have a strong resolve to stay in the markets. And the real name of the game is investing long term. So with that volatility, if your goal is just to make money, you're never going to stick it out.
No, and that's the problem, because people, they go from selling low to buying high, and it's a vicious, repeatable cycle that we see all the time. So what we did to solve that was we created a device, typically a device to keep people invested so they could answer that question. What age can I retire? How much money do I need to have? how do I figure this out? How do I factor in inflation and taxation and these unknowns? How do I play what if? And that's where the whole A to B strategy came from. And it's pretty simple. And everybody should do this. You should do this. You should know exactly, what you need in retirement. So that means having a budget today. It means sitting down to that hard task of looking through what you spend to figure out what your budget is. I mean, how many people know what their budget is today, Rye?
Well, unless you've really sitting down, to your point, Bob, and you've gone through all your bills, and I'd say, most of you haven't done it. You haven't sat down, haven't figured out exactly what you're going to need in retirement. And that's why I always like, our philosophy, Bob, is you're trying to get from point A to point B, as we always say, with the least amount of risk and the highest odds of success. And it's all about starting with point B. So it's establishing, right, what are those expenses really going to be? But I'd also add in there, and this is really one of the newer dynamics of retirement, is because you're living longer, you're going to have a lot more expense than the previous generation did. So, factoring in, that healthcare cost expense is going to be a huge, huge determinant of when you can retire, because unless you have a long-term care policy, which is something you should look into, that's going to come out of your portfolio potentially, those long-term care expenses, and that can be over $250,000 a year. So there's a lot of big expenses that need to be budgeted in that didn't have to be budgeted in before for people's retirements when we were doing this, Bob, say even 10, 15 years ago. Those dynamics have changed dramatically.
Yeah, and that's the whole point. You have to start with the end in mind. In other words, you have to start with knowing where you want to get to, because if you don't know where you're going, you might go somewhere else, as Yogi Berra used to say. And it doesn't have to be absolutely correct. You start with a number, you start, with the plan to figure out where you want to go, then you work backwards to where you are right now. And that's just a matter of figuring out how much money you've already saved. What do you have in savings and investments? And also figuring out, how much money you're able to save every year and how much you're contributing to your retirement plans and how much you're saving in your primary account. And then more importantly, what passive income streams are you entitled to, like a pension or a royalty? Or what do you think is the most important passive income stream in most people's retirement life, right?
Yeah, the other one is Social Security, which we're all entitled to at a certain age. And that's the thing, you can take it at a lot of different ages. And that's also why we built this white paper, Bob, 10 strategies for maximizing your Social Security benefits. And if you want to learn a bit more about that strategy, you just need to text BULLISH, that's BULLISH, to 555-888. That's the word bullish to 555-888, because when it comes to things like Social Security, taking your pension, it can get very complex and there's no right answer. So your specific situation when it comes to taking income streams like passive income streams is going to be very different than somebody else's. So, you have to customize that stuff to what your needs are going to be specifically. And one more time, text the word bullish to 555-888. That's bullish, BULLISH.
Yeah, so well said, Rye, because naming your Social Security strategy can have a big impact on what your future cash flow looks like. And so it doesn't come down to, retiring at a certain age or having a certain amount of money. It's about, looking at your wealth projection from point A to point B. And if you can't get there based on the amount of money you've saved, based on additional savings, based on your passive income streams, there's really only 3 solutions.
What are they, Bob?
Well, retire later, right? Somehow come up with more money, win the lottery, or die early, which is something we never recommend. That's called the Kevorkian solution, which we don't recommend. But really what it comes down to is if you don't know where you are today, you're going to have a real hard time getting to where you want to be in retirement. And you need to sit down with a professional, run some what-if scenarios, and see if those goals that you think you're going to have in retirement, let's put it down on paper so that you can see if you have a high probability of achieving those goals, or if you have to make some hard decisions today. Much better to make them now than when you're in retirement, when you can't, when your options are so few and you don't have the opportunities that you have right now.
Yeah, so if you're sitting there wondering, when can I retire? I don't know when I can retire. I need a plan that establishes what my goals are first and then work back and build an investment strategy around that. Here's your shot to do it. Don't waste time. If you're one of the next 10 callers and you have over $250,000 saved for retirement, Bob and I will run for you our total financial master plan, and we'll do it with no obligation or cost. It's a full financial review. We're going to look at taxes, Are you paying unnecessary taxes? Well, we'll have a CPA review your tax return to make sure you're not paying unnecessary taxes. Bring in your wills and trusts, your estate docs. We actually have an estate planner that will review those to make sure that your estate plan is up to date and what changes you may want to make. And then bring in all of your statements, all those financial statements, bring them into the office. We're going to break them all down for you on a simple 3-page spreadsheet, our investment analysis spreadsheet, and we're going to look at diversification. Are you taking too much risk in your portfolio for your goals? What pitfalls do you have in your portfolio with regards to your goals? We're going to look at income. Income's critical in retirement. You need reliable income. We're going to show you how to optimize or maximize the income on your portfolio. And we're going to look at fees. Are you being overcharged on your investments? There's a lot of hidden costs in your portfolio in those mutual funds, annuities. We're going to break down every fee in your portfolio to see if we can reduce the cost. And then we're going to tie it all together in one total financial master plan and determine when can you retire. Are you going to outlive your money? Is your money going to outlive you? Utilizing strategies now our family's worked on for over 4 decades to take you from point A to point B with the least amount of risk and the highest odds of success.
So call us at 844-PLAN-NYC. That's 844-752-6692. If you're one of the next few callers with over $200,000 saved for retirement, our team will run for you our total financial master plan. Now, there's no obligation. There's no cost. All you have to do is call 844-PLAN-NYC. That's 844-752-6692. This is no pain, no gain financial radio.
It's time for the weekly No Pain, No Gain market update with the team at Payne Capital Management here in New York City.
Good morning. This is Bob Payne, Chief Investment Officer here at Payne Capital Management. Global stocks rebounded this week along with U.S. Treasury bond yields and the U.S. dollar as investors regained an appetite for riskier assets as tensions eased between the United States and North Korea, only to suffer their second worst trading day of the year on Thursday after a horrific terror attack in Barcelona, Spain, that left 14 people dead and many more victims hospitalized. Now, in bull markets, investors tend to look past geopolitical risk and focus on what really matters to the financial markets. That's company earnings and economic growth. And the S&P 500 just posted 2 consecutive quarters of double-digit growth for the first time since 2011. Now, as one Wall Street strategist stated, the real money is made in the stock market by staying invested. And the best way for you to stay invested in stocks is to adopt an asset allocation that gives you the highest probability of achieving your goals and reduces the risk in your portfolio to the point that allows you to sleep like a baby every night. And if you're having trouble sleeping at night, why lose sleep when you can achieve your goals with the least amount of risk and as much certainty as any professional can provide? Give us a call at 844-PLAN-NYC. That's 844-752-6692. This is Bob Payne. We're No Pain, No Gain Financial Radio.
For all the latest information and news that you need to retire successfully, make sure you go to BeBullish.com. That's BeBullish.com.
Ryan Payne, Bob Payne, No Pain, No Gain Financial Radio. And in this segment, we'd like to talk about safe money. As you get closer to retirement and then in retirement, you just can't take the same risk you could while you're working. And we typically break this down into what we call the wealth accumulation stage of your life and then the wealth distribution stage. And as you get into that wealth distribution stage, you have to start building in what we call certainty or safe investments or safe money into your portfolio. And Bob, what is safe money? What does that really mean when we're talking about safe money in your portfolio?
Well, Ryan, I don't know if you remember this or not, but to your grandmother, safe money was having a passbook account where she made no money, but every week they would pencil in, her balance. And as long as it didn't go down, she was very happy. And I think that's the way most people think safe money should be. But there's a lot of charlatans out there that use the word safe, to sell this concept that you can have all the return that the markets so generously give without any risk. And don't you see that? I see it every day. How about you?
Yeah, I mean, talk about, I know, I'm going to guess you're talking about insurance products, Bob, where they love to throw that word guarantee around. And, and think about, the old saying is, if it sounds too good to be true, it probably really is. So how can you get all the upside of the market with no risk or no downside? I mean, that sounds impossible to me, just thinking about the laws of how investments work.
Well, I like the fact that they tell you can get all the upside with none of the downside, and it doesn't cost anything. They must be so generous with their time that their biggest charity are people they sell insurance policies to.
Yeah, I suspect that's not the truth. And, the same thing is with gold, right? Every time you turn on the television, the financial pornography, there's these different advertisements for putting money in gold. It's a safe haven. And last time I looked, gold is more volatile to some extent than the stock market.
Well, what it comes down to is that the stock market has been the greatest wealth creator in the history of mankind. So it's almost as if all these different people out there are marketing ways not for you to invest in the greatest generator of wealth, because they want to tell you that markets are risky and it's going to crash. I mean, every time I see these ads, they talk about a market crash. Well, how many permanent crashes have there been in history?
0.0, Bob.
And what's happened after every crash?
You've always had a recovery and markets have gone higher. And the other thing is, when you talk about a lot of these insurance policies or annuities that talk about getting all the upside of the market, the one thing they don't mention is you don't receive any dividends on those actual investments. And if you look at historically, one of the main drivers of your return as a stock market investor is that rental income or dividends you collect along the way. And one of the most important parts of your return gets completely stripped out of these insurance type products where they're offering all these guarantees and all this upside. They leave out that they're taking out one of the most important parts of your return, which is crazy.
Yeah, it is. And then in the end, then stockbrokers go out there and say, all you have to do is buy high yielding dividend paying stocks, and they start to buy the highest yielding stocks out there. That doesn't work either.
Yeah, so there's a lot of misinformation about safe money. I'll even take it a step further. Then you can argue, well, just like grandma had all her money in a passbook savings account, having your money sitting in cash, which is a strategy that you may be using right now, saying, well, that's how I'm going to protect myself if the market goes down. But the problem there is if you're earning very little interest on your cash, you're losing against purchasing power. So it's like, where do you go, Bob?
Well, that's what we were talking about earlier, the whole A to B strategy. It's about growing your money net of inflation. So when you look at these hedge funds, for example, Warren Buffett made a big bet with a hedge fund manager 10 years ago that the stock market could outperform hedge funds. Well, outperformed by 400%. It's almost as if people sell these products to hedge your opportunity to make money.
Yeah, so the question is, how do you really create safe money in your portfolio? What's the way to actually build a portfolio that you have safety? If it's not annuities with guaranteed upside or guaranteed, I don't know what they guarantee. It's usually a lot less than you think. And it's not sitting in cash. It's not putting your money in gold. I mean, how do you protect yourself with safety in your portfolio? How do you really do it?
Well, you have to be educated. And the thing you have to learn is that the market has been going up in your lifetime. In your lifetime, the markets, all financial markets, have made new highs. Now, it comes with a bump in the road, right? Markets don't go straight up. Trees don't grow to the sky. So what you have to do is recognize that volatility is inherent in the market. What's the best way to describe volatility, son?
I mean, in simple layman's terms, is your money going up and down, right? If it goes up a lot and goes down a lot, it's more volatile than something that doesn't move very much, up or down, basically.
Yeah, so what we have learned over time is that every dip in history has been temporary and therefore a buying opportunity, but no one should have all their money in one asset class like stocks. And that's why the only true hedge of achieving your financial goals is to have a balanced portfolio where a big part of your money is invested in high quality bonds, where your downside risk is your bonds mature, you get all your money back with interest. And if you're sitting there wondering, do I have a balanced portfolio? Has someone tricked me into investing in a safe investment? What you really need to do is give us a call. If you're one of those next few callers and you saved at least $250,000 for retirement, Ryan and I will run for you our renowned Total Financial Master Plan. There's no obligation. There's no cost. It's the only review you'll ever need in your financial life. And if you're one of those next few callers, here's exactly what we're going to do for you. We're going to review your taxes with our CPA partner to make sure you're utilizing every tax benefit available to you legally under today's tax code. We're going to review your estate plan to be certain that your plan is not an IOU to the IRS. And if you haven't taken the time to create even a simple will, we'll get you on that path to creating your own personal estate plan. And lastly, we're going to review all your investment statements from every financial institution, regardless of where they're held. And we're going to run for you our famous investment analysis spreadsheet. This is a simple 3-page document that will tell you exactly how you're doing with your current portfolio, whether or not you're diversified. It'll reveal those hidden risks. Remember, risks are something we only realize in hindsight. You may not be sinking, but you may have already hit that iceberg. Fees, we're going to look at all your costs of your portfolio, both those fees that are buried deep in the prospectus of the mutual fund or in that annuity contract. And lastly, we're going to look at the cash flow that's generated from your portfolio on an annual basis, and we're going to look to optimize that income. And finally, we'll tie it all together for you into one customized total financial master plan and answer that age-old question: are you going to outlive your money, or will your money outlive you? Utilizing strategies that my family has been perfecting now for over 40 years. We want to help take you from your personal point A to point B, your dreams, your goals with your values, with the least amount of risk and the highest odds of success.
So don't waste time. Be one of the next 10 callers at 844-PLAN-NYC. That's 844-752-6692. Get the full review. We'll look at everything. Make sure you have safe money in your portfolio at 844-PLAN-NYC. That's 844-752-6692. If you're one of the next 10 callers, over $200,000 saved for retirement, give us a call at 844-PLAN-NYC. That's 844-752-6692. Stay right there. We have a special offer coming your way at No Pain, No Gain Financial Radio.
We are going to do up down until Blue is no longer tired and thirsty.
To get in shape, head to the gym. To get financially secure, keep it tuned here to No Pain, No Gain.
It's No Pain, No Gain Financial Radio. And as I previously mentioned, we do have a special offer for you today. And we know that Social Security is a big, big part of your retirement, and it's something that you really need to take a hard look at to figure out the best way to take it. So Bob and I put together for you 10 strategies on how to best maximize your Social Security benefit. And if you text the word bullish to 555-888, that's BULLISH, that's the word bullish to 555-888. You can learn a couple different ways to strategically optimize your Social Security. And one more time, text the word bullish to 555-888. That's bullish, BULLISH. Now it's time for Financial Pornography of the Week. This is where Bob and I scour the daily financial news and call out the biggest offenders of offering obscene and profane financial guidance to help protect yourself from making any ill-advised financial decisions. And Bob, what did you find today? What's out there this past week in the world of financial pornography?
Well, Rod, we talked a lot about, is it safe today? So I found this TV advertisement that's also on the internet, on the radio, and this gentleman, I use that term loosely, is advertising an investment that's guaranteed by God.
Guaranteed by God. Wow, that's heavy. I mean, when you're starting to bring God into your investments, it's like a whole nother level of investing. Yeah,
this advisor is selling what are called life settlements. It sounds a lot better when it's guaranteed by God. And basically what's saying, if they take policies that were held by other policyholders, and in exchange for a lump sum payment, you then take on the life insurance policy of this other person. Sounds a little ghoulish to me more than investing, doesn't it?
Yeah, so you become the beneficiary of someone else's life insurance policy, and you have to pay the premiums, betting that they're going to die.
Wow. Betting that they're going to die. Now, I know death is inevitable, right? The two things in life that are inevitable are death and taxes. But, have you noticed that people are living longer? Is that something you've noticed recently, Ryan?
Yeah, exactly. They're living much longer, and I think that's been one of the big problems with these life settlements is you keep paying these premiums and you're paying year after year, that it eats away at any sort of return because people are just living longer and longer. So it's the investment's getting to be less and less attractive because of longevity. It's crazy.
Well, it's not even that. It's just, as you get older, you become less insurable. And a lot of these policies demand even higher premiums. So if you have to keep putting more money in and the person lives longer, your return really is diminished. And sometimes, it's the way they run these projections is that, people just don't oblige and die on time. I mean, you can get mad at the stock market, you get mad at the bond market, you get mad at the Federal Reserve, and you can yell at the television. What are you going to do? Call this person up and tell them to die? I mean, it's really a horrible way to invest.
I mean, I like the euphemism. The life settlement sounds like such a harmless type of investment strategy. But then when you start to uncover that you're making bets on people's lives, I'd like to stay away from that strategy, Bob. That is financial.
Well, it fits into the whole theme today, right? These people out there selling these safe investments, and they have these universal characteristics. Number one, they're loaded with fees, even though people tell you there are no fees. And secondly, they're illiquid. So if you have an emergency, if you have a family illness, if you have somebody that dies prematurely and you need your own money, you can't get it.
That's right. So you don't even have liquidity and you're just pumping money into a policy when, intuitively, as you get into retirement and close to retirement, this is the problem with a lot of insurance products, is you're giving up liquidity for the most part. And liquidity is one of the key things you want to have when you're retired. Access to your money is so critical.
And the other thing you really want to notice is whenever you see these things heavily advertised, we know when you run a television ad, it costs a lot of money. And somebody's working for free and they're running television ads, 1 and 1 does not equal 2.
No, it sounds like a lot of big commissions being paid to a salesman then can advertise to even earn more commissions. But that's another conversation for another day.
Well, hopefully we'll save a lot of people a lot of money on highlighting that, Rye. What did you find this week in the world of financial pornography?
Well, one article that came up a lot is, and I've just found one of these articles that's very similar to a lot of articles, is Trump threats of nuclear war with North Korea are risking the economic growth he loves to take credit for. Well, he probably is taking credit for the economic growth, but this whole thing about North Korea and the whole idea here is, although the impact on the markets thus far has been relatively modest, which is true, we've had this big conflict heating up with North Korea. The whole thinking is, well, eventually it could have a great impact or a big dent on the U.S. economy, which could make the markets crash. And I think if you look at this historically, what we have to remember is, geopolitics do have a way of shaking things up, but they've never really had any lasting damage on the market if you look at it historically, Bob.
No, so true. I mean, the market is basically a measuring device, and it measures the profitability of companies, not the certainty of uncertainty.
Yeah, exactly. And if you look at historically back when Iraq invaded Kuwait in 1990, the market dropped about 1.1% on that day. And over the next 250 trading days, it actually went up 10%. If you go back to the Cuban Missile Crisis in 1962, the market dropped about 6% plus, and then eventually it recovered that in a quick time fashion. And there's never been a time historically where any geopolitical events actually caused a recession. So contrary to popular belief that any sort of geopolitical risk that we have right now is somehow going to put us in some downward spiral, is really, really not likely. I mean, it's not really going to put a dent into that $8.5 trillion U.S. economy or bring it to its knees, which means it's actually riskier to get out of stocks when these things happen because the economy can still keep chugging along.
Yeah, so I guess you could just file that geopolitical under risk. There's always types of risks out there. There's interest rate risk, there's economic risk. So there's that black swan event like a nuclear attack. All these uncertainties that cause the market to be volatile because the markets like certainty. But whenever uncertainty is resolved, you have that certainty and then the market resumes its upward path. So I think really what you have to do is not be fearful of things that are uncertain, right? There is, I think you have to look at everything and say that's a risk, but it's not a certainty. What's a certainty is you're going to need your money to grow net of inflation. And that's why you've got to have a strategy where you have an all-purpose strategy where when these opportunities of, we call them risk and you call it, oh my goodness, the market goes down. You can't anticipate these things. What you have to do is act when these things happen. And that's why you need to be diversified to take advantage of the volatility that's inherent in the market, because no one can predict what's going to happen next. We know that it's going to be cold this February, all right? We don't know what the weather's going to be tomorrow. So long term, we know with pretty good certainty where things are headed. Short term, it's anyone's guess. But that's why you need to be prepared. And if you don't feel like you're prepared right now, or you have the portfolio that's all purpose and can take advantage of these opportunities, what you should do is give us a call. And if you're one of the next few callers and you've saved at least $250,000 for your retirement, Ryan and I will run for you our renowned Total Financial Master Plan. There's no obligation and there's no cost. It's the only financial review you'll ever need because it incorporates everything. And if you're one of the next few callers, here's exactly what you can expect. Bring in last year's tax return. We'll have it reviewed to make sure you're utilizing every tax benefit that's available to you by our CPA partner. We're going to review your estate plan. If you haven't created an estate plan, if you're one of the 50% of Americans who hasn't created a will, give us a call. We'll get you started. Lastly, let's look at all your investment statements. You don't even have to open up the statements. Put them in a shopping bag and bring them in. We'll tear it apart. We'll put it down into a 3-page, simple investment analysis spreadsheet, which will give you a complete view of your portfolio and see whether you're diversified, what fees you're paying, and how much income you're generating. There are a lot of hidden fees in a portfolio. We'll dig into those prospectuses in your mutual fund. We'll look down deep into your contracts of your annuities and your insurance policies to make sure you're not being overcharged on your investments. We'll look at income. We'll look to see if we can increase the amount of cash flow in your portfolio and optimize that cash flow, to you as an investor. And lastly, we'll tie it all together into one customized total financial master plan, utilizing strategies that we've been perfecting now for over 40 years. We want to help take you from your financial point A to your goals, your dreams, your point B with the least amount of risk and as much certainty as any fiduciary can provide.
So don't waste time. Give us a call now at 844-PLAN-NYC. That's 844-752-6692. Be one of the next 10 callers. Get a full review at 844-PLAN-NYC. That's 844-752-6692. We're going to look at everything, a real financial plan, at 844-PLAN-NYC. That's 844-752-6692. This is No Pain, No Gain Financial Radio.
Time for some New York City trivia.
I'm walking here.
Did you know that it can cost more than $280,000 to run a hot dog stand per year in Central Park? Speaking of hot dogs, keep listening to No Pain, No Gain and make your retirement plan a wiener. Gosh, I'm sorry. I meant to say a winner.
It's Ryan Payne, Bob Payne, No Pain, No Gain. And if you want to learn a little more about Bob and myself, you can always check us out on the World Wide Web at BeBullish.com. That's BeBullish.com. And we also put together this week, if you want to check it out, Social Security, we talk about retirement a lot, is going to be one of the most important decisions you make. And there's so many ways to take Social Security. We put together 10 strategies that you can look to employ to take Social Security, and you can get that if you text us at 555-888 and simply put the word bullish. That's BULLISH. Again, at 555-888. Text the word bullish, BULLISH, and we'll give you a myriad of different strategies that you can utilize so you can optimize Social Security to really make sure you're setting up your retirement correctly. Again, you just simply have to text us at 555-888 and just put the word in there, bullish. That's BULLISH. That's BULLISH, bullish, at 555-888. And if you ever want to talk to Bob or I, you can email us directly, questions at bbullish.com. That's questions at bbullish.com. And Bob and I will answer your questions directly. And if it's a really good question, we'll answer it right here on the show. And it's every week. We always get a couple good questions. And the first one comes up for Lou. He's on the Upper West Side here in Manhattan. He writes in, Ryan, I've always assumed that I'll be in a lower tax bracket when I retire, but now I'm questioning whether or not that's true. What do you normally see? What's your experience, Bob? I mean, my experience is if you structure things properly, we usually can reduce your I'd say in most cases you can reduce your tax bracket in retirement.
Most cases you can, right? Because, the big part of the income that's taxed by the IRS is your earned income from your employment. And,
right.
Once you're retired, hopefully you retire without a part-time job. Unfortunately, a lot of people have to do that today. But you're going to get a lot of your income, from your portfolio, from Social Security, from pensions, if you still have one. But, there are ways of building tax-free income and tax-efficient portfolios. What are some of those ways, Rye, that people should take advantage of?
Yeah, and this is where structuring your portfolio is so critical. We talked about creating a tax-free retirement. And, a lot of times, we talk about this on the show too, money saved in taxes is just as green as any money you can make invested. So using things like tax-free income from tax-free bonds in your portfolio can actually create a lot of income in retirement and not pay taxes on it, which can be huge. You can put yourself in a really, really low tax bracket if you use things like tax-free bonds and you structure your more tax-inefficient investments in certain accounts and your more tax-efficient investments in other accounts. So really structuring your investments, Bob, can be a big determiner of really, are you in a low tax bracket or not when you get to retirement?
Well, I know a big key to a lot of the plans that you've put together over the last 20 years have been converting some of those highly taxed IRA portfolios into Roth IRAs. Not something you necessarily want to do the day you retire, but that's where planning comes in. To take advantage of that tax-free account. Whether you're contributing while you're working or you do a conversion, or when you taught me about the backdoor Roth IRA, it's created a lot of wealth for me over the last couple of years. And these are great ideas that make these portfolios much more tax efficient.
Well, that's the other thing too, is because you're putting money into these retirement accounts, your 401ks, you've got all these IRAs, and really what you're setting yourself up for is what we call a tax time bomb once you hit the age of 70 and a half. Because at 70 and a half, you have to start drawing from those portfolios and paying taxes on them. And the bigger your retirement accounts are when you hit 70 and a half, the bigger tax time bomb you're going to have with taxes when you hit that age. So any planning you can do before that is so, so critical. In fact, I have a client, he's younger, he's about 59, he's so ready to retire. He can't stand his job. And he's not, he's going to wait to take Social Security to 66. In his case, it makes sense. And if he retires in the next 2 years, he's going to have this whole period where he's generating no income, but we're creating a huge portfolio of tax-free income. So he's going to have a lot of income coming in that's tax-free, and we're going to start to look to convert his retirement accounts early. So instead of waiting to 70 and a half, we're going to convert a lot of his tax-deferred accounts to tax-free Roth IRAs now while he's younger. So there's a lot of creativity that can go around that, and the more proactive you are, the better.
That's a famous investment advisor once said that the money you save in taxes is just as green as the money you make in your portfolio.
Brilliant words. I'll tell you, Bob, if I could quote myself all day long. The next question comes in from Mary. He's in Madison, New Jersey. He writes in, Bob, the market has to crash soon. Does it, Mary? It just has to. Am I wrong to think that right now?
Well, one of the advantages, Mary, that we have at Payne Capital Management is we manage a lot of money for a lot of people, and we talk to people all over the country, let alone around the world, on a daily basis. So there is a conventional mindset. There is, we all read the same things, and as average normal human beings, as investors, we all come to the same conclusion. And I can tell you, last 2 years, the conclusion was on the collective conscious of the investing public was the market had to crash because it crashed 7 years ago. Now, where would they come up with that idea, Rye?
Well, there's this whole, conventional wisdom, or this whole idea that every 7 to 8 years the market crashes because it happened to do that over the last 2 decades. But that's the only time it really did that, where it was every 7 to 8 years that the market crashed. There's no real basis for it.
Doesn't 15 years make a trend?
No, it does not make a trend.
Well, I thought it was interesting when you go back and you look at the two, crashes. You had the one in 2008 and then another one in 2001. And what happened before 2000? How about the market went almost straight up for 18 years? Where was the 7-year crash there?
Yeah, it's history is always it's always a buzzkill on a great theory.
Facts are a terrible thing, aren't they, right?
Yeah. Facts are they get in the way of a great story, as they say, and that's what you have to think about right now. Look, we always talk about this, but don't anticipate in your portfolio. No one knows what's going to happen. Your only real defender against any sort of geopolitical risk, like we talked about earlier on the show, any imminent crash, is proper diversification. Diversification's going to be the key. And if you're saying to yourself right now, I need to get properly diversified to defend myself against anything that can happen in the markets. I want to create a tax-free retirement. I don't want my retirement accounts to be a tax time bomb. Here's your shot to get a full review and protect yourself against all those things with our Total Financial Master Plan. That's a review that's going to address all those issues. So we'll look at taxes. We'll even have a CPA review your tax return to make sure you're not paying unnecessary taxes and you can create a tax-free retirement in retirement. We're going to look at that estate plan, make sure it's set up correctly. We have an estate planner that will review that to make sure your wills, your trusts are up to date, any changes you want to make to those. And then what we're going to do is we're going to take all of your statements, every financial account that you have, we're going to tie them all together, and we're going to put it on a simple 3-page spreadsheet, our famous investment analysis spreadsheet, and we're going to look at asset allocation diversification. What risks do you have in your portfolio? Are you properly diversified? You're probably not and don't even know it. We're going to look at income. Can we optimize or increase the amount of income you have on your portfolio? Can we make it tax-free? We're going to show you how to optimize income on your portfolio. And we're going to look at fees. Are you being overcharged on your investments? There's a lot of hidden costs in your portfolio you don't know you're paying with those insurance policies, annuities, mutual funds. Let's look at the fees. Let's see if we can reduce the cost on your portfolio, including that hidden cost. Then we're going to tie it together to make sure your money's going to outlive you. You're not going to outlive your money utilizing strategies we've literally worked on for over 40 years to take your family from point A to point B with the least amount of risk and the highest odds of success.
This is your opportunity. Give us a call at 844-PLAN-NYC. That's 844-752-6692. If you're one of the next few callers and you've saved over $200,000 for your retirement, we'll run for you our Total Financial Master Plan. No obligation, no cost. Just call us at 844-PLAN-NYC. That's 844-752-6692. This is Bob Payne. This is Rye Payne. We're no pain, no gain. Financial Radio.
This is no pain, no gain. Without us, you're just stuck where you are. So let's get moving and back to the show.
It's no pain, no gain, Financial Radio. And, in an effort to just make sure you're getting the best information out there, one offer we put up in this show so you can get access to everything you need to know about Social Security. Bob and I put together 10 strategies you can utilize. Remember, Social Security, again, is going to be one of the biggest decisions you make in retirement, so we want to get you access to the best information. So if you'd like to take a look, you'd like to have that strategy, go ahead and text us at 555-888 and just put the word bullish. That's BULLISH. Again, we'll give you 10 strategies. Start to educate yourself on the best way to take Social Security. Just text us 555-888 and put that word in there, bullish, BULLISH. That's 555-888. And again, text the word bullish.
Here's this week's Spotlight on No Pain, No Gain.
And it's time for my favorite segment of the show, our Spotlight segment, where we actually dissect a real financial plan every week, and we uncover what we call the flaws or pain points. Of course, that's pain spelled P-A-Y-N-E, so you can avoid some of the same mistakes with your own planning and investing. And like every week, we like to have a special guest, so we're bringing on our super financial angel, because that's Jen Angel, one of the star financial advisors at Payne Capital. Jen, how are you this morning?
I'm good. How you guys doing?
No complaints. Jenny, when you're on the show, it's just like the sun is shining regardless of what the weather is outside.
It's your favorite part because I'm your favorite.
Jen, no lack of confidence ever. So why don't you tell us about this case that you worked on and some of the flaws or pain points that these retirees have with their strategy?
Sure. So they're in their early 60s, just retired last year. So they, had done it on their own for a while, and they came to me and said, there's a couple, and he said, I have this annuity local kind of trust fund, and he said, I think it's in pretty safe investments, but I don't really know what it's in. That last year it did 1%, this year it's up 7%. And I was like, well, he gets a statement that says, just the value, and that's it.
Okay.
So I said, okay, well, can you find out what it's in? Can they send you more information? And let's kind of dissect that from there. Because he just gets a statement that just has the value, nothing else. So, if you ask, hey, what's this invested in? They have to tell you.
Right. Simple concept. I like that.
Bernie Madoff wouldn't tell you.
Right,
Yeah.
exactly. So I was like, let's, I've never really seen anything like this before. Let's dial back, kind of peel back the layers here, see what it's actually invested in. And, he said, I think it's all safe. It's been conservative. It goes up a little bit each year, but I don't really know. So we got the info from them, and, they're in hedge funds, private real estate funds, commercial real estate funds, high yield bond funds. I looked at this and I was like, this is not safe.
So the irony of this is probably the most risky investments you could possibly be in. Not even, on the riskier, on a scale of 1 to 10, it's like a 15 on risk.
Yeah, exactly.
Insane.
I was like, this is
so much right to the show today. We talk about safe investments, and here's someone with the majority of their net worth invested the only way they could define it as safe, not having any idea what the underlying portfolio was consisting of.
Scary.
Right. So, peel back all the layers there. And, I said, these are completely illiquid funds. I mean, this makes sense for someone that has, $100 million and they can put 10 in this fund. Not for someone whose entire net worth is based on this, annuity, trust fund that, have no idea what it's invested in. One of them was Scaramucci's fund, which was, I think funny to point out. He's like,
Our 10-day communications director.
Oh yeah, that guy. Whether you liked him or not, I mean, you just, if you know anything about him, his fund's incredibly risky. So just kind of peeling back those layers made it seem like, oh, okay, this actually isn't that safe. And when you ask them, what are you actually invested in? It's really interesting. And that was, his huge
liquid. How do they get out of something like this?
Well, because it's such a small portion of this entire fund. I'm like, if you're able to move this, let's move this as soon as possible. And luckily, because you're in this, annuity local fund, so you're able to move it out, individually. Now the entire annuity company probably cannot, but if you're an individual human, you can move your own money. You're allowed to move your own money. What are the chances? Even though
it was a large part of their portfolio, it was, in the scheme of things, it was a small part of this big fund.
Right, exactly. So I was like, you can move your money out. Let's do it as soon as possible. So, and that was a big chunk of the net worth. And then the other two kind of big chunks of his money one was in pretty much cash, and the other one was individual stocks. So we kind of have three very different strategies happening. And it was just very interesting portfolio to kind of peel back the layers there.
And that's so often you find that.
How could something so risky only return 1% last year? We've been in a big booming bull market now for 8 years.
That's what I said.
Yeah, isn't that kind of like heads you lose, tails you lose?
Yeah. And I was like, hey, remember 2008? Yeah, all those people that were kind of responsible for that, they all run these funds now.
And never mind the fees. God knows what the mooch is charging on that Skybridge Capital account. I mean, it's got to be 2% plus a year.
2 and 20.
Yeah.
So 2% fees plus 20% of whatever the profits are.
I always wonder, when you see somebody like that who's on television every day, when does he actually manage the portfolio?
I don't know.
He's got a lot more time on his hands now, so maybe he'll be more razor focused on his fund.
So, Jen, I'm looking at your portfolio comparison, that simple 3-page document that breaks down everybody's portfolio in terms of diversification and fees and income. So with a truly safe portfolio, a conservative balanced portfolio with high quality bonds, you're able to increase their cash flow by $18,000 a year.
Yeah, and the best part is you can actually see what you're invested in.
And
so you know exactly what's in there.
Yeah, and that's the other thing is that's why it's so here's a perfect example, and this is so common. You think you have a relatively safe portfolio, but you really don't know because you can't really see. You don't have an x-ray machine to see what's inside of a lot of these funds. That's why it's so worth it to just plot everything out like we do on a spreadsheet and really see where the risk is in your portfolio and what some of the underlying investments look like.
Yeah,
well,
I
that's
think
so
it
true,
was
right? Because so many people just go by the label. And, a lot of times, like, for instance, the street doesn't like to sell you junk bonds because who wants to invest their retirement in junk? So they call it high yield. And so you have to peel back the label and you got to pull back the curtain to see what's in the portfolio. And that's what this analysis does. And I think if people just read what they actually owned and were given the truth at the beginning of the relationship, we wouldn't have a business because, people wouldn't come to see us to find out about these things because no one's willing to tell them the truth about investing. And it's really kind of simple, but, they can't get past the label. And Wall Street found a long time ago that, people like labels.
Yeah. It's all about marketing and branding. Because we'll pick on the Mooch again. His fund's called Skybridge Capital. That makes me feel like I'm just going to be like walking across the sky. Everything's okay. Meanwhile, it's one of the riskiest funds out there. And if you're thinking to yourself, I need to know what is going on in my portfolio. Do I have a risky portfolio? Do I have a safe portfolio? Here's your shot to do it. We still have a couple slots left. If you're one of the next few callers, we will run for you, myself, Bob, and Jen Angel, Financial Angel, will run for you our total financial master plan. We'll do it with no obligation or cost so you can look at everything. We're going to look at taxes. We're going to make sure you have as much of a tax-free retirement as you possibly can. We'll have our CPA look at last year's tax return. We'll look at your wills and trust, your estate. Is it up to date? What changes need to be made? We have an estate planner that'll review that for you. And then bring in all your statements, just like this couple did, into our office. We'll put everything on a simple 3-page spreadsheet, our famous investment analysis spreadsheet, and we'll look at what risky investments do you have in your portfolio? What fees are you paying on those investments? What kind of income are you generating? For these people, we were able to increase their income by $18,000 a year in a more conservative portfolio. Can we do the same thing for you? Can we make your income tax-free? Can we create a more tax-free retirement? We're going to try to optimize that, and we're going to tie it all together into one total financial master plan, and we're going to use strategies we've worked on for over 40 years to make sure that your money's going to outlive you. You're not going to outlive your money and get you to where you need to get to, your goals, your dreams, with the least amount of risk and the highest probabilities of success.
So don't procrastinate. Give us a call, 844-PLAN-NYC, 844-752-6692. If you're one of the next few callers and you've saved over $250,000 for your retirement, we'll run for you our total financial master plan. No obligation, no cost, no strings attached. Just give us a call, 844-PLAN-NYC. That's 844-752-6692.
All right, well, great show. Jen Angel, thank you for coming on this Sunday morning.
Thanks for having me, guys.
Hey, Jen, you always have the most interesting cases.
I know.
Where do you find these cases, Jen? What are you doing in your spare time?
These people will find me. I'm just lucky like that.
You have that natural law of attraction. Big Bob, any plans for the rest of the day?
Right, I'm going to get charged up, get my batteries charged up and ready to go. The market opens tomorrow at 9:30, and I'll be right there at the start.
I'm loving it. All right, have a great rest of your weekend, and as always, be bullish.
Information provided on today's show is provided for information purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with an investment, legal, or tax professional before taking any action.